So here's another thing. I'm going to continue to talk about it because it's fucking playing. I keep talking about it because it's playing. Global liquidity continues to rise. You can't tell me that prices are going to go lower in an environment where there's more liquidity to go into markets. Global liquidity is at all-time highs right now. What are the plans for the Fed? Here are the plans. Trump is going to get rid of Powell. Powell's an incompetent bastard. Okay? Refusing to cut interest rates right before the U.S. government wants to refinance its national debt. And the fact that Jerome will not cut interest rates it's costing the United States government billions and billions and billions of dollars a year in interest. Why? Because when they can't refinance their debt. If Jerome would lower the rates, he would give government the opportunity to refinance at a lower interest rate, therefore saving money on interest. Fantastic, right? That would be great. That would make sense, especially considering the price of goods and inflation is down and continues to be down, and economic data continues to be down. Fucking ridiculous, right? So anyways, what the fuck? Let me know what that means. Okay, so they're going to get rid of Powell. If they can get rid of Powell, we can get interest rates down lower. Bullish for risk assets. Good. So we have rate cuts in our back pocket. Rate cuts will be bullish for markets. Okay, we got that in our back pocket. Global liquidity is rising, going to new all-time highs. We got that in our back pocket. Keep in mind, something we haven't talked about in a long time that I was just revisiting the thesis on was the fact that we still haven't even started QE yet in the US. Okay, we're still in a state of QT. So QT is quantitative tightening. The Fed is tightening their balance sheets, tightening their resources. What does that mean? It means they're offloading assets and acquiring cash. That quantitative tightening is removing billions of dollars in liquidity from markets every single month. It's a downward pressure on liquidity, a downward pressure on price action. So we did recently, within the last few months, cut that in half. So I believe we were taking out about $50 billion worth of liquidity per month. Now we're down to $25 billion. Don't quote me on that, but something in that range. So we still have the opportunity to quit QT, quantitative tightening. On top of that, what if we start QE? QE is quantitative expanding. Now we're pumping liquidity directly into markets, directly into the market. We start doing QE, shit starts to get insane, right? Last time we did QE was when? COVID, right? Or did massive QE, right? So it's important to keep that in mind. Now, that's still in our back pocket. So we got to get rid of Jerome, get the interest rates down, start doing QE or NQT. Fantastic. Global liquidity rising higher. Fantastic. Okay, so that's good overall macro. We're in a good overall macro place, okay? So confidence, longer term, super bullish, right? So we take a look at this and we say, all right, we're looking good there. What's our play then, and when's it going to happen? So if you look back at previous cycle, 2 cycles ago, let's take a look at Bitcoin 2 cycles ago, okay? So we topped out locally 2013, okay? Bear market, we start trucking up higher 2016, 2017. Who gets elected in November of 16? Pompino gets elected in his first term, November 16. straight up only. Okay. Now it looks like that because it's on the weekly time frame. Now we got our pullbacks in here, of course, right? But we pumped. But when did we top? We topped December 17. Q4 of his first term is when we topped. So what does it look like we're doing this time? I'll just call it right here. Okay, Trump elected second term. So what's Q4? What's that put us at? December. Puts us here. Let's get this out of here. Okay. Puts us out into here. December 25 would be Q4 of his second term. First year of the second term. Okay. This is the trajectory that we're on. So I expect us to land up in 156, like right here. Right in here. Okay. This is my target up in here. Just call it right there. Okay. So stay with me now. Stay with me, huh? So why is this important? Well, considering we didn't top out till Q4 of last term for Trump, why was that? So we had a couple different things going on. Trump did do tariffs on the his last presidency. He went through the same thing. Did tariffs, did all this similar policy changes economically, et cetera. It was very similar to what he did this time, except he's just being way more aggressive with it. Okay, so it's impacting markets a lot more upfront. But it's still halted run and topping until Q4 of his first year in office.